We're still continuing with topic 3, auditing, and in this video we are going to look at fraud and non-compliance with laws and regulations. So we shall start with fraud. According to ISA 240, the auditor's responsibility relating to fraud in an audit of financial statements defines fraud as an intentional act by one or more individuals among management, those charged with governance, employees, third parties, involving the use of deception to obtain unjust or illegal advantage. So fraud is something that is done intentionally, and it can be done by one individual or it can be done by a group of people. For example, management and those charged with governance or employees can combine, or they even involve another party, maybe the supplier, things like that. So it is an intentional act, and it involves the use of deceptions or lies so that the other person can obtain what they can't obtain when they tell the truth. That's what we call fraud. Misstatements due to fraud are intentional, whereas those due to error are unintentional. So that is the difference between misstatements made due to error and misstatements made due to fraud. Those made due to fraud are intentional, like someone does it well knowing, but those made due to error, like it's not intended. So an auditor is mainly concerned with fraud that causes material misstatements in financial statements. If there was fraud of 2k, like that's not material 2000, but if it was like maybe 20m, 2m, depending on the organization. So an auditor is concerned with the fraud that causes material misstatements in the financial statements. Yeah, and there is management fraud involving management, and also employee fraud involving only employees. So let's look at the types of fraud that cause material misstatements in financial statements. The first one is fraudulent financial reporting. This involves intentional misstatements, like they do it intentionally. They change the figures intentionally, including omissions of amount, like they do not record it completely, or disclosures, like they do not disclose something intentionally under the notes. Yeah, in financial statements to deceive financial statement users. Yeah, so fraudulent financial reporting, it involves intentional misstatements. And this includes things like manipulation, falsification, or alteration of accounting records or supporting documents, like recording sales that didn't exist or not recording sales that occurred. It also includes misrepresentation or omission of events or transactions in the financial statement, like you refuse intentionally to record a transaction that occurred, or you misrepresent something, like instead of recording it under maybe a long-term liability, you put it under current liability. Yeah. Then it also involves misapplication of accounting policies. For example, like maybe according to IAS 2 of inventory, it says that inventory is supposed to be recorded at the law of cost and net realizable value, but you decide to ignore that and do what you want. So it involves intentional misapplication of accounting policies. Another type of fraud we have is misappropriation of assets, and this involves theft of the entity's assets like cash and inventory. Employees can decide to real steal money, hard money, or stock, and they go with it. Employees can carry this out maybe on a small scale, or they can take immaterial amounts, but then management can decide to do it on a larger scale, like it's easily done by management on a larger scale. And then after doing it, they conceal the misappropriation, like they cover it up by false or misleading records so that the auditor doesn't find out. Misappropriation of assets involves things like embezzling receipts, for example, diverting them to private bank accounts, or stealing physical assets or intellectual property. Intellectual property can be like software, yeah, inventory, or selling data of the company, things like that. You sell it to the competitors. Then causing an entity to pay for goods not received. Then using assets for personal use. So those are some of the examples of misappropriation of property. Sorry, of assets. Same thing. Another type of fraud that can lead to material misstatements is the fraud risk factors or the fraud triangle. So these are events or conditions that indicate an incentive or pressure to commit fraud or provide an opportunity to commit fraud. So in this case, there are those events or conditions that push the employees or management or a third party to commit fraud. So in the fraud triangle, we have three things, that is pressure, opportunity, and then rationalization. So for pressure, where there is pressure or incentive on management to meet performance targets or other employees to commit fraud so as to pay personal debts. So an employee can be forced, maybe they are having personal debts that they're supposed to pay, but they do not have any other source of income. So they end up committing fraud. Or when they have performance targets set by management, whereby they say, like to the sales department, you're supposed to meet a target of this amount by the end of this financial year. So they will be forced, in case they can't meet the target, they will be forced to commit fraud. Yeah, so that is the first one, pressure. Then the second one is opportunity, whereby there is an opportunity for management or employees to commit fraud. For example, if they're given large amounts of cash, or whereby the small assets with high value and in high demand, like jewelry, so they decide to use that as an opportunity. Or whereby there is a weak board of directors or internal control, so they use that opportunity to their advantage. Then whereby maybe there is an inadequate IT knowledge by management, like the employees are wiser than the management, so they'll use that as an advantage. Yeah, so that is opportunity. Then the last one is rationalization. This is the attitude that justifies fraud. For example, someone says, I already work hard and I earn little, so I'm taking what I deserve. That is rationalization. So fraud triangle has theory, pressure, opportunity, and rationalization.